All right, what's up, everybody? How's everybody doing on this fantastic Sunday morning? We're going to do a little bit of a bar replay today. We're going to look at some FX pairs because that's what the community asked for. We'll talk about Bitcoin briefly, and the bar replay will be on Bitcoin. Let me just finish getting everything set up here. We'll rock and roll. All right, so yeah. I mean, there's not really much to talk about Bitcoin. You can see that it is absolutely getting crushed to the downside. I mean, that's a weekly goal. I mean, last week when we put in this candle right here, you should have been on edge. Because remember, what's different from, say, this candle and this candle here? Well, the difference is the continuation you get the week after. So we'll use the fibs on the bearish engulfings or just the massive bearish drop downs to show you what I'm referring to. So on this candle, if you just use the weekly candle that stabs down, do not use the previous candle's low. Just use this candle. This is your breakdown candle. That is the candle in question. That's the range that we're looking to identify trade setups for the next week to come. If you look here on this bullish green candle, you traded up just above the 50% retracement, which the 50% retracement is not an actual Fibonacci number, okay? It's just the midpoint of the candle. That's why I put it on there. It is not an actual Fibonacci number. The rest of them are. The rest of them are fib numbers. This one is not. But the reason it's important is because it's a midpoint. So anyways, you trade up above the midpoint, but you do not breach your 618. That is bearish continuation. That is a bearish continuation candle. You can see when you closed on this week, the very next open, that Sunday, when it opened, time to get short. Now, we would have been looking for a push higher to get short. Didn't give it to you. But we were already in this short. We got short on this push higher here. But if you were to be waiting for the close, you would not have been able to take this trade. Generally, you will get a small retest or a small pop up, but you can see how when you traded up into here, the bearishness already started to attack. This would probably look like a bearish day on a daily time frame, all right? But when this closed here, we got short up into the 618 retracement, and we traded that bastard all the way down to the lows. That's where we exited our position. We had little less than a quarter on the position size. When this candle broke out above the trend line, that's when I dropped all of it and said something's different. So let's bring the fib over here and show you this one, right? Because this is the weekly range that you've shown here. So if you were going to see bearish continuation here, now this doesn't always work. Will sometimes you trade and close up above this and still roll over? Yeah, but it's not going to give you that bearish signal, right? That would be more or less like a hard to deal with signal. You know what I mean? You'd be like, well, I'm kind of bearish, but I don't really like how last week closed. That type of shit. Right? But anyways, you can see here, once you got above that, once you started getting closer and closer to the end of the week, you could see that you were not going to have any bearish continuation. But we were watching on the smaller time frames anyway. That would have been where we were looking to take our first bearish entry at the sign of weakness above the 618. Let's get over here because this is not where we are. Here. So, big strong candle. And like I said, we were watching that trend line to keep us from getting bearish on an asset that was clearly bullish. So here's the first daily close. Look where you're closing. You're testing the 50% retracement. You close inside of that. So on the next daily candle, you get this move right here. You would not have been looking to take this short because A, you're above that breakdown trend line. That is a bullish signal. And B, you're well above the 50% retracement level on the weekly expansion range. So you're going to leave that short alone, right? That's when you say, hold up. I don't care that it's testing the daily Heath level. I want to know, this thing looks bullish now. So that's when you stop taking those bearish entries. Even though you have this, right? Even though you have that, or that was a weekly, that was a weekly Heath level. This would have been your daily Heath level. This is where people would have been looking to get short. And you got smoked on that trade if you took it. But like I said, if you just pay attention to that descending trend line and the fact that you are well above the 50% retracement level on the weekly range, that'll keep you out of taking some losing short positions. So let's go back over here. I know this isn't bar replay, Ray, but I just want to make everybody clear about this because I don't want to see people get wrecked anymore on a bear market. It is a bear market, but I mean, you could still get wrecked. All right. So that's this. That's this right here. So that was a no-go short. Here you go, Bitcoin showing massive continuation. If you look at the weakness, this was another reason why we were getting extremely bearish on Bitcoin on this channel. If you weren't around back then, look at this. You never even come close to testing that, and then you get downside continuation and a massive one, right? There was no trade entry for us on the weekly time frame. I'm sure if I go down in time frames, we might find a place, but you know, this was extremely a weak close. You're not looking to try to get into positions like this. So here is your, what I call the liquidator candle, the one that smokes everybody, and you get those liquidations. Apologies on the glitching screen. For some reason, the computer used to be able to handle this stuff. Now it can't. I don't know what's different. I do not download programs, so I guess it's just getting old. I am getting ready to buy a new one. Probably in the next week or so. All right, here we go. So this liquidator candle, we had sideways consolidation. These are the times when you have these big moves like this, you're typically not going to be looking to get short on the very first stab up into your 50% retracement, because you generally are going to get a lot of consolidation out of a candle like this. That's a massive range expansion candle, and it happened rapidly. All right, rapidly. You got a 28% drop. Now that's not even off the all-time high. That's just how big that freaking candle was. A 28% drop. So I did put out a video that weekend and told everybody to chill out on the short side, because I am going to expect at least 4 to 5 weeks of consolidation. Choppy, right? Choppy. And if you look over here, same scenario. I even used this case to basically give my evidence to the court, if you will. This case right here, this bearish candle. Notice how you got 4 to 5 weeks of choppiness before, boom, you stab down. Now, obviously, this week was different than this week because you got that boom, stab down, but you closed below it. That was your signal. Weak. We are looking for bearish engulfing, or not bearish engulfing. We are looking for bearish entries. I seen a couple YouTubers out there saying that this bullish candle could turn into something real amazing, that they were looking at this as a bullish signal. That's how behind the times they are. This is not a bullish signal, right? So this is a bearish signal. There it is. Boom. There's your trade up into the 50% retracement right below the 618, and then you drop and close. You would be looking to get short on this push lower. This trade right here, the weekly, trades up into your 50% retracement, barely gets above it, and then starts to drop. You take that entry, you throw your stop above that wick high, and if you get stopped out, it was worth it. That was a high probable trade. That right there. No matter how wide the stop would have been, that's a high probable entry for short side continuation. I've just shown you like 8 times, or 3 times where it worked, 1 time where it didn't, but you had enough stuff to go that, you know, you wouldn't have taken a trade like that. This is how you stay on the right side of the markets, by looking at your higher time frames, preferably the weekly. The weekly will give false signals on occasion. That's why I typically will go out even further and look at the 2-week, but the weekly range is important. The options market uses the weekly range to price in volatility. So in the market, before the market ever even opens on Monday, the New York Stock Exchange, Bitcoin is still a risk-off asset. So you have to trade it like you're trading the S&P 500 or you're trading the NASDAQ. It's the same thing. It's being traded almost identical, okay? Until Bitcoin decouples from that, when it starts to get more adoption and stuff like that, then people are going to be able to trade it differently. But until that happens, you do what it says to do, right? And it says to do, trade it like it's a S&P 500. Last week, we knew it was a 4-day week, and we knew that we were going to potentially see more volatility based on how the options market was pricing it in. Told everybody inside of Discord. I told everybody outside of Discord in the Twitter. If you're not following me on Twitter, it's trade talk _, trade _talk. Or I said it wrong. It's trade _talk _ there at Twitter. Anyways, I said the options market is pricing in more volatility than we had last week. And the implication on this is massive because it's a 4-day week. It's not even a long week. And they were pricing in almost a $2 extra or bigger move, if you will, on a short week. They knew something. That's why they were pricing the premium like that. So I knew something, and I told everybody. And this is what you got. Volatility, baby. All right, so there's nothing to do on Bitcoin. If you want, like, because I don't know how low it's going to go, guys. I do not. When people ask me, is this a good spot to add? I literally have no words for you. I do not know, right? I'm only trading the probabilities. I'm looking for my high probable entries, and I stay consistent in that, right? I did take 2 gambles over the weekend, and that's what they were, trying to pick a bottom on Bitcoin. I got stopped out, right? Every single time I stray from my strategy, I lose. And I keep doing it like a freaking rookie. I'm not going to lie, guys. I still make mistakes, all right? I'm a trader just like you. I'm a human just like you. I have emotions just like you. Most of the time, I can keep them under check. This weekend, I didn't. I should have told myself, why? Who gives a shit if you do catch the bottom? You can say you caught the bottom. It's sexy, but that's all it is. It's a losing gamble 90% of the time. Even now, this thing is rolling over on a Sunday. So if you're going to look for bearish opportunities, watch the 50% and 618 on this weekly's range. So next week, if you get a bullish pop, you're going to be watching that area. The 618 also comes in with last week's low, so you could potentially see a 618 stab. Don't take the first attempt at it. Like if this happens on Monday or Tuesday, then something could be different because that would be a big bullish pop, right? And we don't want to step in front of bullish momentum either. This could be the near-term low for a while. But I thought this could be the near-term low for a while too. And this for as well, you know what I mean? So just watch that level. In a bearish market, those are decent signals, okay? Decent signals. But I'll keep y'all up to tracks of what I'm doing. I'll let you know on Twitter or wherever. If you're not part of the Discord, it's okay. That Discord was just set up as like, I don't know what you'd call it, like a donation. I don't hide anything, and I don't, you know what I mean? It's all for free. You can learn everything I do for free. So here we go. Let's do a little bit of bar replay, and then we'll go check out some FX pairs. Let me see what's going on in the chat. How do I have 68 people watching this? Give me 1 second. No wonder it's public. Jesus. All right, well, screw that. Sorry, guys. I made it public. That's why we have 68 people here. Motherfucker. Alright, I'm not going to kick anybody out. This was supposed to be the private live stream, but since you're here, you're here. We'll just rock and roll with it. And for you Patreon members, I will do something maybe in the middle of the week for you guys. Apologies, that was my fault. Alright, so, bar replay. The best way to use this tool if you are on TradingView, you must pay for the Pro package at least, which the Pro package is just the next step in line as being the major one or the high dollar one. It's like not much. It's like $15 a month, right? It's not much. This tool, in my opinion, is worth $100 a month. That's what I used when I first once I first got on to this platform. I used that so much. I would stay up till long hours of the night looking at this thing. We'll just go back, scrunch price down like this, so you do not know, so you are not curve fitting your own data, right? You don't want to know what's going on. Absolutely not. Then you just hit this bad boy right there, and then boom, there you are. Now, unfortunately, it's hard to bar replay Bitcoin because I've been watching Bitcoin since its inception almost. So I pretty much know where we are, especially on the weekly time frame. So let's drop down. Let's drop down to the daily. Now what you're doing is you're looking for buying and selling signals when you are a trader. Your job as a trader, damn it, I wish I could hide the date too. If I know the date, then never mind. Anyways, we'll just do it, right? So here's a bullish push, and then you drop hard, right? So this pullback right here eliminated a lot of people. Massive amount of people probably. So what you want to do, and that would be what we would be looking at as the very beginnings of a bear trend, right? Because you have a lower high, lower low sequence and a 38% drop. But we know how this works out already. So how about this? How about we do a bar replay on an FX pair? Because I don't know what they did. I pretty much know what's going to happen on this. But anyways, let's just do it for now. So you're looking for daily entries because we're day traders. We're looking to trade daily range expansions. If you put on your indicators here, let's just drop it down because we typically don't need all of them, because we're looking for like the near term trend, the near term, like the very near term. So all we want to look at is the 21 exponential moving average and then our RSI, right? We're overbought. So we are in a bullish trend. So you would be wanting to look for bullish entries, but you definitely probably don't want to be taking a bullish entry when your RSI looks like this, right? See how that's a big quick stab down? But you can watch levels. Your daily opens and closes. Those are going to be levels to watch for closes, right? So here you go. You stab down lower and you close back above. So at this point in time, I'm probably looking for another stab lower to look for a bullish entry, and I did not get it. All right, but I would have been looking for like this candle to open. You can see that very tiny small wick on it. I would be looking for another check of this level. But with this close, this tells us a lot. It tells us that you pushed well below support, because that would have been support. Your daily open is support, your daily open is your demand zone. Your daily close on the bearish candle is your support. So this pushes well below support and then comes back up. So that's telling you, yes, it did close bearish though, right? You had momentum coming back out of there. So typically, if I wasn't in a bullish trend with a very bullish aggressive price, I would be looking for this swing low to be taken out. But since we're in a very bullish trend and you get this type of price action, that's when it matters. So a lot of people will be looking to take out liquidity levels, right? Every single day, no matter what the trend is in. And that's wrong. You don't do it like that. You try to stick with the overall trend. If you're trading in a range, then you can look to target liquidation levels high, liquidation levels low. In a massive trend like this, you're just looking for a place to get on, to catch the train. And then Bitcoin just rocks on up. Oh wait, no, we aren't where I thought I was. Never mind. Sorry, I thought we were getting ready to go up to 20K here. This may be where it does though. But anyways, you get the point, right? You're looking for levels. Once these levels get made, that creates resistance. Price trades around that resistance for 2-3 days before it finally breaks out. So this bear trap right here potentially would have been a spot to look intraday. So let's focus on that and let's go intraday. Let's kill the indicators. I mean, we have to go back, so it's not really necessary, but all right, so here we are. This is what intraday chop slop looks like. So we know this is daily support. This was daily support, apologies. And then this was the trap candle, but that was on the close. You see how difficult it is on an intraday? So when you're looking at intraday levels, you pay attention where your dailies are, but you definitely want to know where your intraday levels are as well, because they tell you a story as well. You just have to be patient and consistent in the way you take your entries, and over time, it'll start to work out. This is hourly support, not because Heath at Trade Talk says it's hourly support. It's hourly support because price says it is. Price closed there, therefore price says that's hourly support. Here is your first close below. This is also a place to liquidate retail traders. Notice how you get that close below, and it's the last time you close below that price. This is a bear trap. Since this trap occurs, once this candle took out this candle's, let me get rid of this. Let me get rid of this because this is a very important teaching lesson. All right. This is your trap because it closes below support. Then price trades back out of support and tests that level multiple times. Once you take out this candle's high, which you do here, you know this was a trap. Even though price trades back down to support, you're still looking for bullish entries and you're still following this support because this was a trap. Now, will this candle's close act as support? Absolutely it can. It does here. But this is your main support. Whenever you have a trap and you know it's a trap, always revert to the support that it broke below because that's your indicator of a trap. That's your indication that you're in a bullish trend. You know the RSI is cooking, like cranked. You know you're above the 21 exponential average and you're getting further away from it. Retail wants to say, well, I want to play that, move back to the 21. The mean reversion. That's an idiot play in a strong bull trend. You only look for mean reversion plays in a chop market, not in a massively trending one. Never. If you try that mean reversion shit, you're going to get ran over a lot, especially in an asset like Bitcoin that can rip thousands of percents. Always stay with price. So intraday here. So this is where we're at Trade Talk looking to take our bullish entries as close to this level as possible. And we're going to try to get our stop underneath the lowest wick possible. This looks scary to take this trade. It looks freaky as hell because you are bearish, right? But this is buying low and selling high. So this is when you're looking for your entry. You trade straight up to the moon at that point. This is your win. Boom. That's like a 3-to-1, 4-to-1 trade right there. That's where you take your profits, move your stop to break even, and let the rest ride. You've taken your money out of the market. This allows you to sit easy in the rest of that position, right? No matter what happens, a liquidator wick comes down and smokes your stop, you're still good. You still made money on the trade. It was still a profitable trade. And as a trader, that is your job, to make consistent, profitable wins. There you go. Price, that was your intraday entry. Price just flew away. Now, people are going to want to try to say, especially because it's public, that this is all hindsight. And they're right, it kind of is. But you can ask anybody in here with the little icon under their name and they'll tell you this is how we trade. We plan this out. That's how I could tell you what to look for, because that's what we're looking for. So that's it, right? There you go. You rocked and rolled off to the motherland. Let's go do it on Forex because, like I said, it's going to be difficult. Not going to hit many losses on Bitcoin because we know where it is all the time. We've studied this asset for so many years. All right, first let's do some Forex. Just get everybody seeing what we're going to be looking for. See, this is the problem right now on US dollar. All right, so if we pull up the S&P 500 real quick, it's important because Bitcoin's trading with this asset. Here is your weekly range expansion to the downside on the S&P 500. These are going to be your interest, your points of interest, so to speak, for professional traders. They're going to be watching that. And you got to be aware that when price trades back up into here, there's a good chance that it is going to go higher. And there's a good chance that you're going to see some traps, so to speak, right? You're going to get messed around with up here. That's why you got to learn to be patient. Very few trades will work out where you just get a nick of that level and it just trades away. Most of the time, price is going to dilly and dally around that level for a while, making sure it brings enough people in. Then you get that stop out, and then price trades away in the original direction. This day screwed everybody up right here, even me. The reason is because we were above daily support, right? Daily support was here. We were above daily support, and then S&P 500 just starts cooking to the upside. It was one of a big day. SoFi was like, it was the top gainer on the day. That thing was, it traded like $5 up. Massive bullish price action, and then boom, reverted back down. That's bearish. That's a bearish day. That's what bearish price action looks like. So this is starting to be a bear market. You can't say that the S&P 500 is in a bear market yet because it's only off 8%. All right? It's not a big move. It looks like a big move, but it's not. Here's your daily. You come down to here, you can see you're down 8.89%, and 6 of those 8 percentage points came from last week. This move here is a 6% down move. So not a bear market just quite yet on the S&P 500. You got to be sub 20% before you can start to call it. But you can damn sure look for bearish entries as long as it's showing bearish price action. So watch this. Daily close above it, then you're going to be very skeptical about taking bullish entries here, right? Very skeptical. Bearish, apologies. But so this cooked off Friday, Thursday, Wednesday. Now let's go look at the dollar. The dollar should be ripping faces off, right? Not. It is not ripping off faces. Here's Friday. Why is the dollar trading down on the day with the S&P 500? That's a good question. That's a very good question. So the dollar's playing games, right? We were range bound. Let's get rid of all these levels because we definitely don't want to be looking at old stuff. We want the newbies. We want the new stuff. So here was support, right? That was the support we were looking to be buyers at. Broke down, closed below. So we weren't looking for that. Not quite looking to take shorts. You were below your 21 exponential moving average and you did get below your RSI. So, technically you can look for shorts on the DXY. This could be why it's trading like this. Because the signals say that it's a short, but the S&P 500 says this thing should be cooking because that's how it used to trade. But the markets are always ever evolving. So an evolving market means you have to learn with it, and you can't still apply the same principles that you did in last year's market or the year prior's market to this year. I make that mistake all the time as a trader too. We're looking for Swiss franc strength. We're looking for Japanese yen strength because we are in uncertain times and the Japanese yen is a flight to safety. Japanese yen's been getting smoked. So it is not trading the way it should be trading. Will it eventually? Probably. But we don't know, right? We don't know that it will. Anyways, back to this. This should have been cooking, but it's not. It's definitely not. So going into next week, we're going to be bullish on the dollar only because it's showing us a bullish signal right here. And I am longer term bullish on the dollar because interest rates are good for the dollar. It helps the US dollar strengthen. So it should strengthen it. But at the same time, if oil and everything else is strong, that's going to weaken the dollar. So it's in this limbo range. You can go look at like all your favorite guys on YouTube, all your, fundamental guys. They're going to be split. Some are going to be bullish dollar, some are going to be bearish dollar. That's just because that's the sign. That's the type of market we're in right now. Not everybody is, on one side of this thing. The only reason we're going to be looking for near-term strength on the dollar is because of this right here. This section of price. You closed above resistance there, and you closed above support there, right? I know it's not the best of signals because everything says to go short. All the RSI and the 21 exponential moving average all says to go short. Go short. But something's different. So we'll look for shorts when we take out support, right? If we open up tonight and we close lower, say 95,356. Excuse me for a second. You say 95 or 95, this level, right? If we get a close below this, then we'll look for pullbacks up into daily open or daily res for potential bearish entries, looking only for this range low because that range low is old support. See? But I will, because this is what I do, take profits when the daily low is checked. Once price gets close to the daily low, that's the range that I'm trading. I do take profits. I do move my stop. But this will be secondary targets. And that's only if we close below support. If we close above support again, I'm going to be looking for bullish entries, looking at all this to be a fake out, sort of to speak. But this is the thing as well. Since you had such a massive rip on Bitcoin and the S&P 500, you could see a bullish week on all those assets. You see a bullish pullback on the S&P 500, see a bullish pullback on Bitcoin. So that could mean that we could see more bearish dollar. but they aren't really trading with each other right now. So we're going to trade the dollar on its own merits. Whatever its price action is showing us, that's what how we're going to trade it, unfortunately. And with that, knowing that information, then we know what we're looking for on the other pairs. So EURUSD, since it has the most and highest correlation to the US dollar, this is where we're going to be looking for those entries. So if we're long dollar, we got to be short this. Now short this works. Short this works. Technicals say that this is a beautiful short. You're trading right back up into your 50% return, or your 50 zone, which is that's your neutral zone versus bulls and bears on your RSI. And then there's your 21 exponential moving average, which is kind of like a momentum indicator in itself. If price is trending away from that moving average, then you know that whoever it's trending away from in whatever direction, that's who has control of price. Sounds, like of course, like no duh, dude. But people don't trade it like that. We do, but people don't. People are always on the pick tops and bottoms. I say take the trend, trade with the trend. We were short this thing because of the trend, but yeah, it chopped us up pretty good. Took a couple losing trades in this, but it is what it is. So here, right, this is not quite an outside day. I mean, you didn't take out the high, you did take out the low. So I mean, technically you could call this an inside day still, but you did take out the low. So yeah, it's a trending candle. And which direction is it trending to? Well, it closed up on Friday, but the market is trending to the down direction. So we're going to do the same thing. Let's get rid of all of our levels. Let's go check the weekly range, as that weekly range is ever so important on all assets. It is so important. So we got weekly support here. We closed below it. Another bearish signal. All right. This was a trap. Not yet. We can't call it a trap just yet because that low is still intact. So that does make our job a little bit more difficult. Not even going to lie. We're looking for bearish entries, but we're going to focus only on these two places, more so than we will on the weekly zone. There is no daily levels inside of that to take positions off of. That would make my job a whole lot easier. Let's go into a smaller time frame. Nothing on the 4 or 8 hour. What I'm doing here is I'm looking for a bullish pop, as that will infer intraday demand. And that's what we're trying to do. Nothing. Oh man. Nothing on the hourly. So there's nothing. There you go. There's your half hour and there's your intraday demand. This section here, because you got two up closing candles. So this zone has already been tested with these wicks here. Boom, boom. So it's not a fresh level. The only thing that you could do is you can put a, not support, that's going to be resistance, because it is a bullish candle. So that will tighten up our entries. What? I don't want to leave. I want to delete that level. So moving on into next week, we will be looking to take shorts from this section of price right here in this little square. And we will be aware of traps. Since it's such a small time frame, like I said, there's really not much you can do. Like I can't say, well, if you get an hourly close above, then screw it, because you're probably going to get a lot of chop up in here. Hopefully it comes up in this area around Tuesday, as that would give my bias a little bit more room, because, you know, the first part of the weekly range expansion is usually the fake out move, because we know that candles, all candles, look like this. And then you get your expansion, and then your sideways chop. And your bullish candles usually start out like this. Right? That's what candles look like. That's what they're making. So that's what we're looking for on the first weekly range part, right? We're looking for that first part to just move to the upside. What is wrong with this? Let's just do it this way. I need so get a new computer so bad. All right, so we're gonna be looking to sell as high as 1.13835 on the euro. The pound is different. The pound is structured bullishly, or was. Yeah, no, it's not anymore. It was. This was a massive rip to the upside. This looks good. However, you are at daily demand. That doesn't mean that it'll hold. It just means you're there. You're at it. So you have to take caution, right? We don't know if this is going to hold a support, but it fits our narrative. If we are looking for a bullish pop, like on the S&P 500, on Bitcoin, on the euro, on all your risk assets, we want to see that initial bullish pop. That's to cool off the bearish week everything had last week. So you can look for the same thing, right? But see, this will be different because you have daily res there. Now, you can still get your weekly range to the downside fib levels, but this asset, if you look at it on the daily real quick, is it bullish or bearish? You are bullish on that. You're still above the 50, and you're still bullish. So you can't really short this one. You can't really look for shorts on this one. This one is still structured bullishly, unfortunately. If you want to play against the odds and take a short on it anyways, you're going to watch 1.36121, as that's going to be daily resistance, and your weekly range expansion fib levels will be, once again, like I said at the beginning of this video, only use last week's range. Do not use this high or that low. Use last week's range, because that's the range you're looking for a pullback to. You do have a weekly supply zone there, but I don't like it. It's too close to the lows. This is not a bearish candle at all. This could be signifying bullish continuation. You did not take out this candle's low. So if I were you, I'd play this one smart and probably leave it alone until it gives us a better signal, right? But if you do want to play it, your levels to watch will be 1.36348 and 1.36178, and that's your fib retracements from this candle's high to low. And if you notice, I only have 2 on my fib tool because that's the only 2 I care about. I don't care about anything else. I mean, I'm not saying that anything else isn't helpful. It's just not helpful in my strategy. I am a momentum trader. I'm looking to catch the momentum at its swing lows or swing highs to get in fantastic trades, right? Fantastic trades. Let's go look at pound yen, because that could be relevant. Now, our bias last week on the pound yen was just, it was bearish. I mean, bullish, because we were looking for retail sentiment was short, right? Retail sentiment was short, so we were looking for a push up, right? We were looking to get long and then look to trade it up to the highs to take out the retail shorts. But instead, the real market direction kicked in the full swing and had us, or me, off sides. We did take a trade on it, and it was successful because, like I said, I take profits intraday, and think if I didn't do that, I would have been stopped out. So that's why I take profits. My data shown me, as I was building this strategy over time, that my wins, I get a lot more of them if I take 2/3 of the position off and move the stop to break even. Over time, it plays out better that way, because we definitely can't, we don't know which way price is going to go. There's nobody alive that does. We're taking these high probable entries. All right, so here we go. Weekly range expansion on pound yen to the downside there. That gives us a 155.766 and 155.413. Now, why was this so bearish? Well, first and foremost, most of your risk markets were bearish last week. The pound is considered a risk market. It's a, whenever things good, the pound is generally trending to bullish side of things. When everything's doing bad, usually trends lower. And since it's paired against that ungodly beast there, the Japanese yen, then typically if the yen starts to get bullish because of the risky markets are cutting loose, then you'll start to see the Japanese yen get bullish strength. That's just what used to happen. It does not mean it will happen this year. But we can keep that in the back of our heads. So that's why you got bearishness here. Now the thing is this This is where I got short. We'll go over here to anybody that's new on the pound yen. This trade was a long time ago. I got short on this, looking for yen strength, because this is around when the Fed started talking about taper. I got short there and rode it all the way down to here. I exited the position in all this chop. It wasn't the full size position because I took profits on the daily move, but that 1/3 position size would have been, like the size of a normal swing trade. And I rock and rolled that baby all the way to down. But it came all the way back, is what I'm trying to say. It came all the way back. There is that level right there at your daily supply zone or your daily heat level. Check. 2 areas of checked, and then it rocked off to the bottom. So that's why we were kind of looking for bullish entries over here the other day. Your quarterly level is there as well. It's such a big zone, such a long time. It's already up. Why didn't I see it? Wait a minute. Something's wrong here. Hang on, guys. Something's wrong. That quarterly shouldn't be there, but maybe I was looking at a different quarterly level. I was looking at the quarterly open. That's my bad. Okay, that's where I was wrong. I was looking at the quarterly open, but you do have potential quarter support here as well. Something to be to keep in mind. That is resistance, and there is your breakout. So this could be on a longer term going to be something bullish. But we'll see, right? We'll see. But we're not going to trade off of that level. That's for sure. Because you can see here how the daily was respecting it. But it wasn't respecting it because it's the quarter open. It was respecting it because there is daily demand. Right there. That's your daily demand zone. And that's what price was respecting when it trades back into it. Boom, boom, boom. And then even respected it on the underneath side when it traded back up into it. So there was your supply. You can see how price traded back up into the supply zone and ripped away. Getting a bias is the hardest thing to do in trading. I'm not even going to lie to you guys. Getting that daily bias. Is it going up or is it going down? If that's what we all knew, we would all be trillionaires. That's the hard part. We know where support resistance is. We know where demand and supply is. What we don't know is what direction is the market going to go. So that's why we have to limit our entries to high probable ones. And you would typically, if you do the bar replay, we'll see that sometimes these levels do offer up entries. Right? So you know this is support right here because it's a close and it closed lower. You did take out the high, so it was resembling a track candle, but it was a difficult trading day for sure, no doubt. But on this day, you took out, closed lower into old resistance, also demand, right? Then you trade up on your open, check, heat level, down. That's what we're looking for. But I have my head up my ass looking at retail sentiment. I was looking at one indicator. I should have been looking at the other indicators that mattered. No, actually, the indicators were bullish also. The other indicators were bullish also. It's just we were wrong, right? Price said it, we were wrong. So moving on, you're going to come into potential areas of support. You did break through daily support there, and you closed below, right? So that is going to be an important level to watch moving forward on this week. There probably won't be a trade entry or a trade idea even on this pair this week unless it tests and rolls over on your weekly range, right? You did take out last week's low, which is kind of good for bearishness. But I mean, in the longer scheme of things, this asset is still bullish. Like, did it close above resistance or did it not? It did not. So you're in a turning point, right? I'm flustered. I really don't know which direction to take this asset next week. I would say just stick with last week's range and look for bearish entries. That's what I would say. Since S&P and everything else is coming off so hard, look for bearish entries. But wait for that range expansion. So those levels there are old ones. We'll just put this up and then see where it corresponds. See if you can find any daily levels as well. Did I get the high? I did. Perfect. Yeah, there is. You have daily support right there. Old daily support. So that's going to be a good level to watch for potential resistance. Right there. 155 spot, 459. It won't look so bearish if you get a bullish engulfing. And you can't look at the near-term trend either, because the near-term trend was up, but it's broken to the downside. So both your trend lines won't be helpful at all in this scenario. Maybe a longer dated one, but no, your uptrend trend line is busted to the downside because it was so aggressive in its move up, and your downtrend is not going to be helpful at all either, because you're going to still be under that. But that's your near-term trend, so stay with the trend. The trend is your friend, and the near-term trend is down. So look for that area. 155, 459 will be an area of interest for us. But we will set an alert. I generally don't set alerts because I'm looking at the screens all day. But if you work or whatever and you can't, alerts can be your friend as well. All right, let me see what the chat's saying. Like I said, since I accidentally put everybody in here. Thanks for the free stream. You're welcome. That's my fault. It won't happen again. Yeah. I don't know if you're talking to me or if you're talking to someone else. Everybody makes mistakes. Pay attention. Take notes. Oh, yeah. Yeah, I do. I make mistakes for sure. So I must have said something and a lot of people are dropping off. They think it's the end or they got their value, one or the other. That's fine. So let's see here. I just want to make sure no one's, because I have a bad habit of not looking at the chat. But the people in the Discord will usually let me know if something's wrong because I keep that up as well. Alright, it looks like everybody's just having a good old time in the chat. Good chat. Chat's getting along. It's fantastic. Alright, so let's do some bar replay. What do we want to replay? Let's do the Aussie. Because Aussie is a very good asset to watch for risk on and risk off. You can see how risk off came into this thing. It's only been risk on when the Fed introduced that bullish monetary policy. That is also why, let me say that too, because so people understand what I'm talking about. One time, for once, I just have to get a I told you so in there, right? I usually don't do that because it's unbecoming. My internet just took a dump. Come on. So, we go to the weekly. And you can see this in all the markets. It's not just on Bitcoin. You can see it on Aussie. You can see it everywhere. That's when the Fed put in that really uber bullish monetary policy. Was because of March. Was because of, the Wu flu. So they interjected here. This is when the Fed said, you know what? We got your backs, guys. You want to be bullish? Let's get bullish. Boom. That's why this trend line was important. It had nothing to do with the fact that it's a trend line. It had everything to do with this is when the Fed instituted monetary policy. That's when everything got bullish because of the Fed, not because of anything else. It's because of the Fed, right? So you never had a weekly close under this trend line since Fed instituted bullish policies. That's why it was important. That's why. I understand that off log, that trend line is still valid as a trend line, but you completely destroy the narrative when you look at it like this, because this didn't account for the bullish monetary policy. When you look at it like this, it's just a subjective trend line. But when you look at it the way I laid it out with the narrative, that's what made that trend line so important. That was a fantastic exit point, was it not? Right? we here on this channel have been talking about bearish signals in the market since back in here, since we did this. So I was giving people exit signals. My viewership hurt for it, and everything else suffered because of it, because people only want to hear the bullish FOMO garbage. Over here, you're going to learn how to trade like a pro. So buckle in. That's why it was so important. And that was a great exit signal right there. 51K. Boom. See ya. That's probably also why you got massive rip down once you did that. Once you took out that support zone, it was on like Donkey Kong. Yes, sir. So that's why that trend line was important. Okay, I got in my told you so. Now I can move on. I hate doing it. I really do. Everybody else does it, and I want to separate myself from everybody else. That's what I want to do. I want to stick out. So me and the group, the members of Trade Talk, have come up with a plan. What we're going to do when I get my new setup and I can broadcast throughout the day, new internet, thanks to Elon, whenever it gets here, new computer, we are going to broadcast live. No pants, baby. We're going to have a suit on. We're going to be in our boxers. That way we can stick out. No, I'm kidding. I do rock with no pants on, though. All the time. All the time. This is my home. I'm comfy in my home. All right, let's stretch this out. We make it real small. This way we can't curb fit our own data. Right? Then we can expand this beast. It's on like Donkey Kong. Yes, sir. All right. So, bar replay sesh is in order. Order in the courts. All right, first we want to get our trend indicators because it's not easy to identify trends sometimes. I've been doing this for a long time, and sometimes it's not easy even for me to identify trend. But this way it makes it easier with these two tools. Right, 21 exponential moving average, RSI, indicates you are in a bullish trend. Now, here's the thing. Retail likes to pick tops and bottoms. We have a supply zone here. Boom. Right? Tickety, tickety, tock. This is what I was kind of thinking was going to happen on the pound yen. Something like this. And then go back up and sniff out those retail stops. Where is retail's stops? Retail stops is here. That's your stops. You also have daily res there. So that's what we'd be aiming for on a bullish entry. Right there. And this was a good day here, right? You closed above daily res. Daily res is here and here. You can see my crosshairs. I don't want to put too many lines on there. All right. All right. Intraday we go. I don't know. I might be too far back. I'm not too far back. Swiggity, swiggity, sweet. Here we go. All right, perfect. So that's daily res there. Now we have in a trap, an identifiable trap. Hang on a second. Is it a trap? It is a trap. All right, here's your intraday price action. You trapped both these candles, right? Both supports, this support and this support. Bearish closes are support. Get away from your old, just find a place where the chart hits 3 or 4 times and call that resistance and support. That is not the correct way of doing support and resistance. Your closes are support and resistance. So here is support on the inside of this market. We did not get a test of that, but any trade back down into here, we would be looking for bullish entries, as that would be your high probable setup. We may be too late. Now, if you remember on the daily, this was a nice bullish close. This was a nice bullish close. Closed above res. This was probably that stab up, that really vicious wick to the upside. Then you pull back. All right. So this is where retail is loading the boats on shorts. And you can see how intraday price action is trading back to the upside. We're looking for bear or bullish entries on this. Okay, so we also want to focus on what time it is. So here, let's go over here. We'll mark the London Open, and we'll also mark the New York Open, because that's generally where you're going to see the bulk of your not generally, most of the time. The highest points of volume traded on every single day in the FX market is your London and New York sessions. The New York session is the last session of the day. It's the last open of the day, so that's typically where you get the majority of the volume. That's going to be the end volume. So you want to kind of be positioned and looking for entries around that time. Now this is nasty. This is going to throw everybody off, and it's going to throw the position off. So at this point, we have lost what would have been intraday support, and we're trading back down to another level of price. So this bullish entry is starting to not be so good for this day, right? For this day, we trade every day. So every day we have to find potential levels of support and resistance. So we'll mark out this range as support and resistance. We'll see how price reacts in there. Because what price could be doing is it could be looking to liquidate these lows before it heads on up. But we'll see what happens. Are we going to stop it when we get to the London Open? I don't know if my internet's going to allow us. Here, let me do this. There it goes. Alright, so we're finding support coming into the London session. A stab lower. No, we get a stab higher. So, yep. Now you're going to follow this support zone. Here, if you're trading during the London session, you're still in an uptrend. Your oscillator and everything is still going to register as a bullish trend. So you're going to be watching this support zone. If you're up during London session, this is what your potential entry is going to be. Something as close to support as possible. You have another support zone right there. We do not trade the London Open because I don't get up until 6. So it's already happened. So this is where I'm looking for entries. But you do have a bullish bias. The way you don't have a bullish bias is if you get an hourly close below that, right? And then your next hourly candle gives you continuation. Then you know it's not a trap. If you get that hourly close below and then your next candle reverses, then it's a trap. And you're looking for entries as close to support again as possible. Hopefully that's good enough. So there's your entry, not because, that's what we were just discussing. You're looking for that entry, and as low as this entry, a close below means you're not. There it is. And there's bullish continuation. Now, if you set this up as a trade, had you set this up as a long position, you would be exiting your position now, taking profits. You are not even close to the high of day, but you are at a 3-to-1 risk to reward, and you're at resistance. So you take those profits. You take them. Take them. Don't try to make as much money as possible off these trades. You're just trying to hit consistent winners. There is a win. You take profits, you move your stop to break even, and then let's see what happens when New York comes along. And this is how to effectively use this bar replay. So coming into New York, does it give us an entry? Oof, not really. There's nothing here that I like. I mean, that was the trade. You can definitely see that the London session is forcing price back up, looking for those liquidations. But I mean, you don't have a support zone. So this would have to probably be a no-fly zone. I mean, yeah, I don't know if I would have taken that. And there you go. There's your liquidation. There is your liquidity grab. That's what we aim for. That's what the strategy is all about. We're trying to take entries as close to the direction of the trend as possible, and we're aiming at liquidity zones because that's what price is aiming at. That's what price is always doing. Okay, so Nick Thick Big just hit me up in the Discord. Gareth, I don't know who Gareth is, but is calling for another 10% on equities and Bitcoin to reach 20K before things are bad enough that the Fed has to fire up more printing. Was good video update. I'm giving him more weight than most internet since he's been calling stuff on Kitco. I don't know what Kitco is. I mean, it sounds like a good shout out for him if y'all don't want to listen to him or go watch him. This is the thing. He's trying to inflict his will upon the market. He's trying to say, if this happens, then that will happen. And he doesn't know if either one of those things are going to happen. So, I mean, it's possible. Absolutely. But I'm in the camp that the Fed is going to hike. They're going to hike. They're not going to stop. They don't care if the market loses 20%. Right? And you haven't lost 20%. Keep in mind, ladies and gentlemen, that the S&P 500 is only down 8%. It's not a bear market. The Fed has a lot of room to go. A lot of room to go. Now, if you get off at like 40%, then they'll probably step in. But at 20%, I don't think they will. Because they got to get inflation under control. Have to. Inflation is the killer here. Inflation. That's what's driving the Fed's decisions. You don't get that under control, you cannot print anymore. You can print as much as you want, but it's going to take a wheelbarrow full of cash to go buy a gallon of milk. They're not going to do that. They'll let the markets come off, I'm telling you. That inflation is a lot scarier than the market trading off 20%, in my opinion. All right, so moving on. But, I mean, I'll give them a watch. You can drop the link in there. Or, I mean, I don't care. You can drop the link in the chat if you want. I don't think you can. I can mod you real quick and then you can. Here, let me mod you. There. Now you're modded. You should be able to drop a link, my friend. If you want to share that guy's link in the I don't care, right? Go ahead. Hit him up if you guys want to watch him. I'll check him out too, so drop the link. All right. So, yeah, it doesn't look like it gave us a signal in the New York session. But it did what we were expecting. Your entry was during the London session, and this happens a lot in the FX markets where the signal was London. The entry was London. And we just have to look for other pairs. And sometimes we don't trade. We didn't trade much last week at all. There was no clear signals. And that's what I do. Some people come and they leave because they think I'm trading 15 times a day. I'm not. I might take 3 to 4 trades, and that's on a good week. On a bad week, I don't take any, because closing out the week like 0, neutral, is better than closing out the week red. That's how I look at it. I would rather go into the week without taking any trades, because I'm only looking for high probable entries. All right, so that was played out. Let's just go ahead and play it, and because we are coming on to over an hour. So once you roasted the liquidity above that hourly candle, this is the liquidity though from the daily swing high, right? Let's go over here to the daily. So it doesn't always work out. Everything in trading works, just not all the time. So there's daily res and there's your daily liquidity, but you did take out the intraday liquidity. So now the bearishness can begin. If they sold into these buying orders up here, which it looks like they did. And when I say they, I'm not talking about any specific person. I think price is its own entity. I don't think anybody controls it. I think it does what it wants to do. I think as far as like machine learning goes, price is like the closest we have to it. It does its own thing. It's trying to hurt as many people as possible. If you view it like that, then you don't have to put any blame on they or them. You can simply blame price. And that'll make you try to get better at taking better entries. It's just better if you put the blame on yourself, right? So you can learn how to correct the problem. That's when you start to grow. So moving forward, this thing, we'll see what it does. But, I mean, that daily is still up there. Let's just play it. All right, so it's glitching out bad. You can see that you are getting a near-term downtrend very rapidly. So now we know they sold into that. Now we know for a fact. So there wasn't no more bullish entries. That is the high probable setup. That's the high probable trade. If you've been with me for any while, you will hear me say that a lot. Well, we can't look to take a pullback entry because the trade was up into that wick. That was your trade. From there to there was that was the only bullish trade on the table. Once that occurs, you have no clue what's going to happen. Obviously, if you're bullish and you take profits, you want to see bullish continuation, but that doesn't always occur. If you stretch this out and look, you're literally buying at the very high of the market also, right? So if you go back out to the daily, you're like buying up at the highs. You're buying at the very tops of a near-term trend. So when you're doing that, you're in the right direction until liquidity gets purged. Once that occurs, then the market's probably going to trade off into its own direction. Look how that closed above support. There's support. You wicked well below and closed above. So now I'm interested to see what happens. There you go. All right, so next day you took out those stops. See? Retail thinks that these wicks mean buying pressure. It depends on where in the trend it occurs. If it occurs in the middle of a range, chances are that's going to be a target and not buying pressure. Now, if this candle closed bullish, that would be more indicative of buying pressure. But this is just a near-term pullback. So just pretend like this is your open, price makes a bearish expansion, then pulls back, closes at support. Next day, boom, continuation. So it's not buying pressure when you see these wicks, right? This scenario, it worked out to where it was selling pressure, but it was also a target. Price came right back up and smoked it. Right back up and smoked it. And price does that a lot. All right, guys, I'm going to have to wrap it up because I've been going on for a very long time, over an hour, and I don't like to do them longer than an hour, especially since it's public. So we'll just wrap it up here. Make sure you do that yourself. You know what I mean? Go into bar replay. If you got spare time and you're trying to be, consistently profitable, use that bar replay tool. If you go back too far, you won't be able to go into the intraday times. But you don't necessarily, just focus on the daily at first. Get to understand your daily opens, high, low, and closes. And then once you kind of have an understanding how it works, then you can move on into your intraday stuff. Because you're going to see a lot more chop, a lot more misdirection, a lot more fake outs intraday than you will like on a daily. So, and besides, if you can get profitable trading only daily ranges, like taking swing trades on daily ranges, you're going to be very successful. All right, very successful. So with that, I'm going to go ahead and wrap it up. Thank you guys so much for being here. It was a fluke. It was only supposed to be Patreons, but it's okay. It's all good. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.